Good day, ladies and gentlemen, and welcome to Venus Pipes Q1 FY23 earnings conference call hosted by Antique Stock Broking. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pallav Agarwal. Thank you, and over to you, sir.
Yeah, thank you, Michelle, and good afternoon, everyone, and welcome to the 1Q FY23 Venus Pipes results conference call. We have the senior management represented by Mr. Arun Kothari, the MD and CFO, Mr. Dhruv Patel, the whole-time director, and Mr. Concall, President Finance and Accounts, on the call with us today. So I would like to now hand over the call to Mr. Kothari for his opening remarks. Over to you, sir.
Good morning. Welcome to everyone on the first earnings call for Venus Pipes and Tubes Limited. First and foremost, I hope that you and your family members are safe during these difficult times of COVID. Along with me, I have Mr. Dhruv Patel, our whole-time director, and Mr. Concall, President Finance and Accounts, and SDA, our investor relationship advisor. To begin with, I would like to thank and congratulate all the stakeholders, investor bankers, and business partners for helping us achieve a milestone of getting listed on the Indian Stock Exchange. We were delighted to see such a strong response for our IPO. Since this is our first earnings call, allow me some time to take you through Venus Pipes and Tubes Limited, its journey so far, broad industry updates, and strategy going forward. Followed by this will be operation and financial highlights for the quarter, and then we can open the floor for question and answer. We have also uploaded our latest investor presentation on the stock exchange, and I hope everybody had a chance to go through the same. We are the manufacturer and exporter of stainless steel pipes and tubes in India, based out of Kutch, Gujarat. We make versatile products while have usage in several industries like power, food processing, aerospace, fertilizer, paper, pharmaceutical, and chemical. At the facility located at Dhaneti, near to Kanda and Mundra port, which is one of the major port of the North India. It gives us a logical advantage. Today we export to 20 plus countries, and out of total clients we serve 58 are Fortune 500 companies. Our products contain seamless, welded, and heat exchanger and hydraulic tubes and pipes. I am proud to tell you that we are compliant with the international standards and have been certified by ISO, IBR, and TUV A200. Our quality check is extremely stringent, which is the reason why we could make prestigious clients such as Adani, Asian Paints, Amul, BHEL, Cipla, Godrej, HP, ISRO, L&T, Tata, Volta, and many more. Going forward, there is a much more growth to look at, as India is the second largest steel producer in the world. Not only demand comes from a diversified set of sectors, but also from primary users like chemical, oil and gas, and pharmaceutical, all three which have a huge potential due to government initiative and scheme announced. In such a scenario, our growth strategy to occupy more market share by expanding our capacity from a total of 12,000 MTA to 25,600 MTA. Especially, we would like to mention that our increased capacity will increase our product basket in welded pipe segment up to 48-inch dia pipe, and in seamless segment up to 8-inch dia pipe. Since at present we are manufacturing in welded pipe segment up to 8-inch dia pipe, and in seamless segment up to 4-inch dia pipe. In addition to this, we also make 9,600 MTA of seamless hollow pipe by setting up a piercing line. This backward integration will benefit not only the cost structure, but will eliminate the risk associated with raw material imports. This capex will built on the 45,690 square meter of surplus land on our existing facility. Our other plans are to increase our geographical presence by leveraging our existing relationship with traders, distributors, and market representatives globally. Not only this, we are also planning to install an acid regeneration plant for lower consumption of acid in the manufacturing process. This has both ecological and economical advantage for us. To set up Venus as a stronger brand both domestically and globally, we have planned various brand building activity. Now I am handing over call to Mr. Dhruv Patel, our technical director, who will brief about the technical details and for the existing and expansion project of the company.
Good afternoon, everyone. I'll be briefing about the capacities and the present project status of Venus. So Venus started in December 2015 with the initial capacity of 200 metric tons per month only for the welded pipes. And over a period of time, the capacity had been increasing each year. At present, our total capacity is around 1,000 metric tons per month, where welded pipes contribute to 700 metric tons and seamless pipe contribute around 300 metric tons per month. I'd like to brief you all about the present project status. So the orders have already been placed for major machineries like slitting line, piercing mill, JCO press for 358 plant, the Pilger mills, and further we propose to start a new seamless division and the slitting line by the fourth quarter of financial year 23, and the balance plant will be commissioned in the first quarter of financial 24. I'd also like to brief you about the expanded capacity. Currently, as I told you that we have 700 metric ton capacity for welded per month, and for seamless we have 300 metric ton per month. So it is totaling around 1,000 metric ton per month. Post expansion will be having the seamless capacity of around 800 metric ton per month, and 1,300 metric ton per month will be for welded. And the further 900 metric ton per month for seamless with the backward integration, which will be self-consumed. In this year, we participated in many exhibitions like Global Stainless Steel Expo and Chemtech World in Mumbai. And we also participated in international fair in Germany, which was in Düsseldorf, the Wire and Tube Expo. And further, we'll be participating in Stainless Steel World in Maastricht, Netherlands in September. And now I am handing over the call to Mr. Kunal Bubna, who is our President, Finance and Accounts, for operational and financial highlights for the quarter.
Good afternoon, everyone, and a very warm welcome to our earnings conference call. We have uploaded our latest investor presentation on Stock Exchange for Q1 FY23 results. I hope everybody had an opportunity to go through the same. On the revenue front, the revenue from operation for the Q1 FY23 stood at 103.6 crore as compared to 81.1 crore in Q1 FY22, a growth of 30% on year-on-year basis. Revenue bifurcation for the quarter was 60.3 crore for welded, 44.8 crore for seamless, and rupees 8.5 crore from others. Our export sale too was at 12.4% for this quarter versus 5.9% in Q1 FY22. The dependency on stockist and trader has gone down from 43.77% to 32.2%, that is from as we compared with FY22 with Q1 FY23. Domestically, Gujarat has been our top contributor, but revenue from other states has also gone up, giving us better access across regions. EBITDA stood at rupees 14.5 crore as against 9.3 crore in Q1 FY22, a year-on-year growth of 55%. EBITDA margin is up by 120 basis points. PAT for the quarter is rupees 9.1 crore as compared to 6.8 crore in Q1 FY22, a growth of 34%. Just to brief you on the banking side, in the FY2021 end, we have changed our banker and we introduced SBI as a banker. And wherein the working capital with earlier banks was 30 crore fund base and 22 crore non-fund base apart from the term loan. So this 52 crore was inter-head changed with the SBI. The limit with SBI was fund base 45 and non-fund base 52 crore. So basically, the 52 crore earlier was 32 crore in the form of working capital and 22 crore in the form of non-fund base, which was changed to 45 crore with fund base and non-fund base by 7 crore with SBI. So our debt on the balance sheet as of March 22 will be increased because of conversion of non-fund to fund-based facility. Apart from that, just to brief you on the working capital cycle, is basically it's around 90 days for stock, both raw material and energy taken together, 60 days, around 60 to 65 days for debtors, and near to 30 days for creditors. So it's a net working capital cycle of around 120 days, which is again lower than our peers. Just to update, we have further added two mills in this quarter, basically in July 22, which will result in increased capacity for welded pipe 100 MT per month starting July 22 onwards. Just to brief you on the utilization proceeds from IPO, we have utilized 57.79 crore so far till 30th June 2022, and the major part of the money has been spent on financing the said capex, meeting the working capital requirement, and also IPO expenses. Our capex plans are on track, and the same will, and some facility will be operation by Jan 23, basically Pilgar and piercing mill, and some part by first quarter FY24. The demand scenario going forward looks robust, and we are optimistic for the growth trajectory with higher profitability in the wake of synergy laid out by our capacity expansion plan. With this, I would like to open the floor for Q&A round.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Agarwal from Prithvi Finmart. Please go ahead.
Hello, sir. Sir, my question is related to our capex plan. So, can you reiterate our capex plan? What is the total capex and breakup on the welded pipes and seamless pipe and backward integration? And what is it a phase manner, and what is the time of completion of this project, when the project will start? So this is my first question.
Yeah, sir. For welded pipe, the current capacity is 700 ton a month, and we are expanding it by another 600 ton for a month. So the total capacity post expansion will be 1300 ton a month. Just to mention here, currently we are manufacturing 8-inch dia of welded pipe. With expansion, we would be manufacturing up to 48-inch dia pipe. So it would be increase of 600 ton a month for welded pipe per month capacity, and it will also increase the product basket for the company going ahead. For seamless, we currently manufacture 300 metric ton a month, and the in the expansion we would be increasing by 500 ton a month. So the total capacity post expansion would be 800 ton a month. Just to brief you on the dia what we manufactured for seamless is currently 4-inch dia. Post expansion we would be manufacturing up to 6-inch dia pipe. So if you look, the total capacity currently is 1000 ton a month, taking both welded and seamless and blended basis, which will increase to 2100 per month with the expansion capacity in place. And it's also worth to mention here, we are also putting a backward integration plan for manufacture of hollow pipe, wherein through piercing plant we will be manufacturing hollow pipe, and that capacity will be 900 ton a month, which will add value additions and margins to the bottom line. And in regard to the starting of this project, for piercing and Pilgar mill, we target the fourth quarter of FY23, and for that welded A35 welded line project, we are targeting first quarter of FY24.
First quarter FY20?
24.
24, okay.
Yeah.
So seamless will come in 23 and this is 24, correct? Welded.
Yes, sir.
And
yes.
Backward integration will come?
In the fourth quarter of FY23 only.
Okay, sir. And
along with PRC.
So, can you give the breakup of this capacity? Means the cost, how much it will cost?
So see, it's basically 108 crores we have targeted for this expansion. So it's basically welded, seamless, and piercing as a major component for it. So, and apart from that, there are some quality and machine wherein we are high quality and machine. Apart from that, there are some asset regeneration plants, wherein in our current facility we use, in the pickling process we use some asset that would be regenerated and used, so it will be more economic friendly, and saving on account of chemical would be there. And apart from that, there will be few ancillary machinery to support this entire expansion.
Okay, sir. And sir, how confident we are that whatever capacity expansion we are doing, that will be get absorbed quickly and we can have the full utilization by FY25?
See, we cater to varied number of sectors. If you see, so we cater to chemical, we cater to engineering, we cater to fertilizer, we cater to paper, power, food processing, oil and gas. So there are multiple number of sectors we cater. And the uses of the pipe are threefold basically. It's basically one is for the new project, other is for their replacement, and third is for repair and maintenance. So it's basically a threefold demand, number of sector, varied number of sector we catered. So it gives us a annuity type of business for the year. And apart from that, we are going on adding sector. As if you can see, paper was very nominal percentage, but in this last April to FY23 first quarter, paper sector had increased to 4%. So we are adding sector. Our export sale, which was earlier on a lower side, it was around 12% for the first quarter of FY23. So we are also increasing on front of export. So keeping the right number of sector, giving the export market also they are well placed with us. Export has increased from 5.94% from first quarter of FY22 to 12.4% for first quarter of FY23. So keeping all these things, we very much believe and we are very much up to those demands are there. We are qualified for many of the projects we supply to chemical industry. So.
So if I can ask a further question, like for export market, as we are planning to increase the share of export market.
To interrupt, sir. Sir, I would request you to please rejoin the queue. There are many other participants waiting for their turn.
Okay, no problem.
Thank you. The next question is from the line of Nirav Shah from GC Investments. Please go ahead.
Yeah, good afternoon, sir, and congrats on steady set of numbers. So a couple of questions. Firstly, sir, are we sharing the total volumes for the quarter and corresponding quarter of previous year?
See, it's basically on the volume front, it was basically flattish for this quarter as compared to the last quarter.
Okay, fair point. And so we are more than doubling our capacity from the current number to 25,000 plus tons per annum. So in terms of ramp up, how do you see that capacity utilization going up over the next 2 or 3 years? I mean, how quickly are we targeting that? And another question related to this is continuing from the previous participant's question. In terms of exports, how do you see that mix changing when we are using our capacities on an optimal basis? I mean, at those levels, say in FY25 or 26, what can be the share of exports and the stockist traders? I mean, what is the kind of switch that we are seeing over there?
Yes. Yes, sir. See, sir, from the capacity ramp up, as I said, we will be coming up with our piercing filter plant and piercing plant in the Jan to March 23. So definitely, that usage will be very low as we will be starting in that quarter only. But if you look the FY24, we predominantly believe around 40 to 50% would be the capacity utilization from the new capacity, and FY25 would be the year where this capacity would be utilizing to a maximum extent, which can go up to 70 to 75% for FY25. And from the perspective of, as you said, what would be the contribution going ahead with from export and others, so I would like to say we are seeing a good traction in export, and so we believe it should be going ahead. It should be around 20 to 25% for export. Trade and stockist is around 32% in this quarter, but we believe it should be around 20%, and the rest would be balance would be for direct sales.
Okay, so can we say these numbers by FY25? The ratio 20 to 25% export.
Further, I would like to add something in this. What we are increasing our capacity, we are increasing our product basket basically. Yeah. So our number of existing clients require the bigger size, different type of pipe, which at present Venus doesn't manufacture. So once our capacity will increase, we will be able to market to our existing client also. So we can go, for the capacity, new capacity, we can go on faster basis since we already have an existing client in the different sizes.
Absolutely. Got it, sir. And just lastly, I mean, this is a more question related to the industry. I mean, what is the import scenario that we are seeing? Has it reduced materially over the last 2 years, which can aid our faster ramp up?
Yes, it's right. There are good increase in import, and this will definitely help us to cater our increased capacity. And with, as we said, for welded, we would be adding up to 48-inch dia 5, wherein in the country it will be very few number of manufacturer for this. So those import of higher sizes would be catered by us. So import will definitely help us in increasing our share in the Indian market.
Great, sir. Thanks for answering my questions and best wishes, sir. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Good afternoon, sir, and thanks a lot for the opportunity. Just a couple of questions from my end, which would be basic. Is there any seasonality in your business that we see generally on a quarter-on-quarter basis? Is there any strong quarters that you generally have with respect to your business?
See, it's basically no seasonality is there in our business. It's as I said, it's a threefold demand for our product. First is basically for the new project. Second is for the replacement, because in the sector where we cater like sugar, chemical, the nature of industry, they need to replace their pipe over some period of years. So, and third would be the uses for repair and maintenance. So it's an annuity type of business wherein the order flow throughout the year. So in our product or in our line of business, and as we said, we cater to 10, 12 number of sectors like chemical engineering, fertilizer, pharma, power, food processing, paper, oil and gas, aerospace, etc. So as such, there is no seasonality in our business.
Understood, sir. And is there any order book that you maintain, given that you also said that you're coming out with higher diameter pipes where, there are limited number of players already existing? Is there any order book that is already created, or in general, do you have any order book which is there from time to time, let's say for repairs and maintenance or replacement part, which is more of a certain demand?
See, it's very tough to identify those buckets basically, but it's an internal assessment what we gathered from the client's case for replacement. But to be right, repair and maintenance are very, very nominal. It's more of a project and repair and replacement which form cater to our order book. And see, we try to maintain an order book of around 3 months horizons. And as you said, for the higher size welded pipe, we are currently also getting purchase welded and supplying to our customer. Suppose we get an order up to 8 inch and we also get an order along with that for some higher sizes of welded pipe. So we currently also supplied because so that we can build up our clientele for those categories, and we are doing this.
Understood, sir. And one last one, if I may just please, out of, since you're catering to so many, segments, which is the area where you're seeing, very high demand? Is it, example, chemicals, or is it engineering? Where do you see the next 2 to 3 years? Which are the segments which are going to be major growth drivers for you?
See, the sector where we see it's chemical, it's engineering, it's paper industry, it's sugar and ethanol. These are the predominant sector we see, and fertilizer, where there are good number of demand. And from engineering perspective, just to give you some of the key points, we are with Toyo Engineering India. It was one of the leading EPC consultant for oil and gas. And oil and gas would be again the sector. Technimont Private Limited, it's one of the leading large-scale EPC contractor. We added Technip India Limited. It is again a leading engineering and technology company. We added some metal seal solutions to German clients wherein heat exchanger U-tubes are required. In chemical, we added Asian Pen, Hickel, Nevin Foreign Paper. We added Tamil Nadu Paper and J Paper in the last FY22. For sugar, and we added Rana Group and Almia Bharat. Engineering, we added Isaac Heavy and Tata Project. So there are a varied number of sectors. Engineering, oil and gas, and people should.
Understood, sir. Thanks a lot, and all the very best.
Thank you.
Thank you.
The next question is from the line of Pritish Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir, I have a few questions. One, what is the current capacity utilization that we are running at? My second question is, how much time will it take for you once the new capacity comes, which you're mentioning as Q4 and Q1? How much time does it take for you to stabilize and run this capacity?
See, sir, the current capacity utilization is around 90% for both welded and seamless pipe. And in relation to the upcoming capacity, as we said, we are trying to cater to number of sectors, and we are supplying also higher sizes of welded pipe and all. So we are building up the market for that. So as and when those capacity comes,
I understood.
But those capacity will be in the coming FY24. Those capacity would be not to be ramped up entirely, but it will be utilized to around 50%. And going ahead with FY25, it will be predominantly used to a good extent.
So the incremental capacity you're saying will be utilized 50% in FY24 and 75% in FY20, right?
Yes, sir. Yes.
These capacities are plug and play. Does it take any time to stabilize? Is what I have heard in the seamless side. At least it takes some time to stabilize and all, or it's a plug and play?
See, sir, that's why I said it for seamless, as you said, you're right. We started in January, targeting Jan 23 to March 23. So it will be definitely slightly a buffering period, but it's not that much as a critical as a capacity installation. 1 to 2 months is basically a period which need to be at least addressed to the new development. But apart from that, it can easily be ramped up from there.
Okay. My other question is, sir, on the margin side, with the backward integration, which is obviously the piercing line for the hollow pipe, and in the acid generation plant, what kind of margin addition is possible from this backward integration?
See, sir, for seamless pipe, with this, as you said, with backward integration with some higher sizes, so those definitely would be around, going ahead, will be around 400 to 500 basis point.
This is at the company level, right?
Yeah, at the company level.
Or at the seamless level, or is it at the seamless level or company level?
This is basically at the seamless level, and for welded, it would be around 250 to 350 basis point or 400 basis point.
So company level also is 400 basis point?
Yeah.
Okay. Sir, the other question is, what will be your peak debt, and with backward integration, with backward integration, can there be any changes in working capital cycle?
See, sir, as I said, we are currently having a net working capital cycle of around 120 days, and the peak debt is around 68 to 70 crore currently. But this piercing line and with this going ahead project, there can be some requirement of working capital. So it would be not substantially high, but it would be there, which will be. But and the cycle would be basically can increase up to 30 days another. As you compare to our peers, they are also running in 150 to 170 days. So it would be definitely increased by 20 to 30 days.
Okay, so working capital cycle increases basically.
Slightly it would be increasing.
Okay.
Since usually we are going in the backward integration, so we have to maintain the increase the inventory level also, which will give the effect in the EBITDA level. So since overall capacity is also going to increase, present capacity is our is the 12,000 metric ton per annum, which will go up to threefold with the backward integration.
Okay. Now I understood, sir. I just wanted to know with the process change, because you must be using hollow pipe now, you start using billet. So will there be increase in working capital? So you said it will increase from 120 to 150 days. Yes. And this 400 bits of margin expansion, do we start seeing at 50% capacity utilization level, or we see it at 75% capacity utilization?
See, it will not be entirely at 50% utilization. It will be entirely at full 70 to 75% utilization.
So initially FY24 there will not be expansion in margin. It is FY25.
No, it would be there, but it will not be 400 basis points. I need to say that.
Okay, so it's basically 400 basis points split up in 24 and 25.
Yeah.
Okay. Thank you very much, sir, and have a great day.
Thank you.
Thank you. The next question is from the line of Ramesh Bagmar from Prabhudas Lilladher. I'm so sorry, Kamlesh Bagmar from Prabhudas Lilladher Private Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. So one question on the part of EBITDA per ton. So, like, are we operating at, like, say, around upwards of 53 or 54 odd thousand rupees EBITDA per ton in this quarter, assuming, like, say, 90 odd percent utilization level?
See, again, see that basically it's more like EBITDA per ton, right? But because our is to make to order scenario, it's very difficult to give a standard figure for EBITDA per ton. That is the reason we talk about EBITDA in percentage term only. So theoretically speaking, in case of raw material price come down, EBITDA in percent term should be going up, but it never happened basically. Prices are low, then demand is low. So somebody need to adjust your margins also. It's continuous in case of higher price scenario. Theoretically speaking, shrinkage should be there. That also never happened because then demand is also good, and then the range is also like product means sometimes value-added product percentage contribution top line may be higher. So it's what we see in a EBITDA of around 12.7 to 12.92 for this quarter basically.
Okay. And so going forward, as our capacities come up and we have the backward integration in place, so which all new segments or the new industries we are going to cover up or get diversified?
See, sir, we cater to number of industry currently, but oil and gas would be there, paper industry would be added. We started adding those sectors also. And chemical and engineering will be always be a sector where we cater a good quantum as compared to other sectors. And so pharma, oil and gas, and paper and fertilizers would be another sector which would be.
फर्दर इसमें कमलेश जी कैसा है कि इसमें हेलो
यस सर
हाँ फर्दर इसमें अनऑर्गेनाइज प्लेयर भी काफ़ी हैं इन द मार्केट तो वी आर कैस्टिंग टू ट्राई द मार्केट ऑफ द अनऑर्गेनाइज प्लेयर ऑल्सो तो दैट विल सिंस विनस विल बी इन ऑर्गेनाइज मार्केट और विनस कैन गेट इन बेटर वे तो वी विल टेक द एडवांटेज ऑफ दैट ऑल्सो ऑफ द अनऑर्गेनाइज मार्केट ऑफ द स्टेनलेस स्टील पाइप्स एंड ट्यूब
Okay. But sir, a lot of capacities are also coming up in the unorganized and organized sector. So, do you see a significant increase in the competition?
Since matlab there is a previously since there is a very good demand, number of industry is improving their standard. Just like पहले इंडिया में जो कंजप्शन होता था एसएस पाइप का that was very low. Most of industry use the other pipe category. But slowly जैसे से इम्प्रूवमेंट हो रहा है इन द इंडिया के मैन्युफैक्चरिंग सेक्टर ऑल द क्वालिटी कॉन्शियस हो रहे हैं ऑल द इंडस्ट्री प्लेयर तो डेफिनेटली डिमांड इज गोइंग अप स्टिल देयर इज अ वेरी गुड डिमांड मतलब इसमें काफ़ी अच्छी डिमांड है और इसमें स्केल अप जो न्यू प्लांट जो भी आएंगे कैपेसिटी इमीडिएटली नहीं आ सकते हैं क्योंकि देयर इज अ नंबर ऑफ लॉट ऑफ एंट्री बैरियर्स ओनली जो एग्जिस्टिंग प्लेयर हैं दे कैन इंक्रीज द कैपेसिटी कि देयर इज अ लॉट ऑफ मतलब स्टूडेंट टेस्ट सर्टिफिकेट एवरीथिंग इज रिक्वायर्ड मतलब विदाउट जो नंबर ऑफ जितने भी केमिकल प्लांट्स वगैरह है ना दे वेरी फर्स्ट डे इफ यू पुट द कैपेसिटी दे विल नॉट कम फॉर द बाय फॉर द पाइप they will do the some quality check test certificate all this process take at least 4 to 5 years so there is a entry barrier nobody can come in the 1 year time in the 6 month time in this segment. Okay. This is what there is a typical segment where number of approvals is required or number of certification even a single industry cannot give the order in one instance. They first take the small order then big order then test order then they increase the size of the order because pipes the SS pipe is in the critical operation only. Where is the critical operation? Because there is a lot of cost difference between SS pipe and MS pipe. So it is a critical operation. So all industry users are very conscious about this quality of the pipes.
Okay. And lastly, sir, who would be your nearest competitor and in the same range, like whom do you follow the most, or you see that particular competitor on a close watch for you?
In India, there is a very limited player in SS pipe market. Ratnamani is the market leader. Then Jindal Saw is also in SS pipe segment, or some other players also who is in the seamless segment. Some are in welded segment. In all the three segments, very limited players in the India, which is one of the Ratnamani. Another is the Jindal Saw. Third is the 2x. Other players जो भी हैं इस market में, there are either in the welded segment or seamless segment. So we have the competition between 5 to 7 companies, just Ratnamani, Jindal Saw, Tuba Access, then Maxim Tube, then Sun City, Sunrise. These are the top 7-8 players in the market.
Okay. Great, sir. Thanks a lot. And wish you.
We would request persons who are not asking to keep themselves on mute because there is some echo in the voice.
Sorry to interrupt. I would request all the speakers also to self-mute themselves when they are not speaking. Thank you. The next question is from the line of Asha Jain from Jain Capital. Please go ahead.
Yeah. Hi, sir. So I have a couple of questions. Firstly, so how are we penetrating into exports market, and what are the strategy to expand our export sales? And also, what would be the contribution for export sales in FY23 and 24?
Sir, so for export market, we are planning, like we have already appointed a representative of Venus, who is a very senior person in stainless steel pipe and in the stainless steel pipe in the Europe market. Europe market, like this, we are planning to go ahead. And time by time, we are also exporting to other countries apart from Europe. In Europe also, we are participating in many exhibitions. This year only, we have already participated in one expo to show our market presence, and in September also, we are going to participate in expo. There are leading publications in Europe where we are, we have started getting some coverage.
Okay, and so what would be the estimated contribution for export sales in this
fiscal? In this fiscal, we believe it should be around 12 to 15%.
Okay. So secondly, so is there any margin differential between domestic and export sales?
So see, the margin is basically the direct supply what we made and the export sale we made. The margin are basically in parallel. Apart from that, for export, definitely we get in 1.4% of drawback. So that is some additional which comes when we do exports.
Okay, understood. That's all from my side. Thank you.
Okay, thank you.
Thank you. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Anjana Shah from Shah Investments. Please go ahead. Ms. Shah, I have unmuted your line. Please proceed with your question.
Hello?
Yes, Ms. Shah, you're audible. Please proceed.
Thank you. Thank you for this opportunity, sir. Sir, a couple of questions from my end. First, if you could tell us what is the volume growth and the price growth attributable to our revenue growth for Q1 FY23?
Yeah. See, for the FY23, as compared to the first quarter of FY22, the quantity has been on a flattish. It is basically the more or less same. It was only 1 to 2% growth, and the increase is majorly towards rate or increase in rate for the finished goods. But definitely there has been mixed change as compared to what welded and seamless we do. Seamless had increased to good percentage by in quantity term it has increased by 58% and welded was slightly down.
We have lost the line of Ms. Shah. We'll move on to the next question, which is from the line of Deval Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So what is the reason for the flattish growth in the quarter?
Sir, see, we, as I said, we currently also had an order book of around 100 crores. So it's not as such sluggish. It was flattish basically. And further, and the capacity was basically fully exhausted. If you see, as I said, it was around 90% utilization, so it's basically exhausted from our side. But going ahead and with an order, it will definitely increase going ahead.
So next 2 quarters also, sir, we can see a flattish growth as we are running at full capacity?
No, as I said, in July 22, we added a 100-ton capacity for welded pipe. So that would also be there. And as I said, for higher sizes of welded pipe, we currently also do purchase and sell it so that our markets are built up. So those things would also be there. So it will not be flattish, it will be slightly on the upper side only.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Abhishek Agarwal from Prithvi Finmart. Please go ahead.
Thanks for follow-up, sir. Sir, my question is regarding our direct sale, as currently it's less than 50%, and our more than 50% is coming from channel networks. So, what the mix you are seeing that it will change from now onward, and how you see that will help to increase the margin, and secondly, that will help to reduce the working capital requirement?
See, sir, it's more than 50%. For this quarter, our direct sales was around 55%. And in the last FY22, it was around 46%. And export was 12%. So see, if you see 68, around odd percent for this quarter was from direct sales and export. And the stockist and trader contribution for this current quarter was around 32%. So it's a fair enough direct sales of 70%, taking export 68%. And definitely the margins are always on a higher side when you do direct sale and export as compared to trader and stockist. And that's why we, as I said, there would be a margin expansion going ahead, wherein the trader and stockist, we will try to tone it down to 15 to 20% going ahead. So definitely those margins, as I said, for both welded and seamless, with capacity expansion, with higher sizes, with backward integration, with adding of export in our more export countries in our trajectory, and higher sizes of welded and seamless backward will add to our margin going ahead.
Okay. So just can you give a ballpark figure like how the mix will look like in around FY25?
So see, it's 68% for welded and 40% for seamless, more or less.
So I'm asking about the sales, direct or through channel partner.
So sir, it would be taking export and direct sale. It would be we target around 75% to 80%, and similarly the balance would be for stockist and trader.
And sir, that will help to reduce the working capital?
Not as such, it will more slightly working capital will always require if you are made to an order. So it will not reduce the working capital.
Okay, and sir, last thing that can you give a breakup of EBITDA margin of welded and seamless pipe?
Is it for just a fair idea on it? The quarter was around 14 to 15% for seamless pipe, and it was around 12 to 13% for welded.
Okay, sir. Okay, thanks, sir. Thanks a lot. That's from my end.
Thank you, sir.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yes, sir. So I had a couple of questions on, the demand outlook. Now, with this concerns of recession, in term and leading to some slowdown in demand. So, what is our strategy to counter that? And, are we confident that we will be able to increase our export proportion despite these concerns?
Hello. Pallav, just if you say about the stainless steel piping industry, India में काफी लंबे समय से there is no capacity expansion in this segment. और last 1 year में क्या हुआ है कि from the China part, China पहले competitive was more competitive. तो China का जो भी excess pipe का export वगैरह करता था, there was some export duty benefit. तो since last year से China ने वो export duty का benefit withdraw कर लिया है, तो आज की तारीख में India product and Chinese product stay at the same level. तो आपकी इंडिया की प्रोडक्ट की जो कम्पिटिटिवनेस है वो पूरी वर्ल्ड मार्केट में हो गई है, जो प्रीवियसली नहीं था, बिकॉज ड्यू टू चाइनीज एक्सपोर्ट बेनिफिट. और फर्दर ड्यू टू चाइना प्लस वन पॉलिसी, सम ऑफ द कंट्री और नॉट एक्सपेक्टिंग द चाइनीज मटेरियल और चाइनीज रॉ मटेरियल. तो दे आर एक्सपेक्टिंग कि मतलब दे ओरिजिन फ्रॉम द अदर प्लेसेज. तो आफ्टर चाइना इंडिया में जो सीमलेस पाइप का आप देखेंगे तो सीमलेस पाइप में जैसे वीनस पाइप भी पीएससी लाइन लेके आ रही है, सेम इसी तरह के रत्नमणि भी पीएससी लाइन लेके आई है. तो इंडिया में पीएससी मतलब सीमलेस पाइप मैन्युफैक्चरिंग जो कैपेसिटी है इज वेरी लिमिटेड इन द वेरी लिमिटेड हैंड. तो जो चाइना से एक्सपोर्ट है, जो अपना सीमलेस पाइप का इम्पोर्ट होता था, दैट वाज आल्सो ड्रास्टिकली रिड्यूस. So at the demand pattern, मतलब still you can see from the result also कि it's growing from quarter to quarter also, year to year also. Or at present also we have the order book of the 3 months, or almost other industry also, other peer also have the good order book in this segment. There is some मतलब due to recession मतलब there is a volatility in the market, slightly volatility in the market. The demand is going slightly slow down. Otherwise, we don't foresee much recession in this segment.
Sure. Also, just given the concerns about higher energy and gas costs in Europe, So have you seen any, pipe manufacturers over there, some of the competitors shutting down, which can actually, give us an advantage in terms of volumes, etc.?
Sorry, will you repeat the question, Pallavi?
I think what I'm saying is, given that energy costs are very high due to the Russia-Ukraine conflict,
Okay.
we have seen a lot of shutdowns happening in, let's say, zinc smelter or aluminum smelting capacity. So do we have any competitors of ours who are manufacturing stainless steel pipes in Europe? Have you seen any of them, say, going out of business or any shutdowns happening in this segment?
Pallavi, there is not much energy cost involved in the manufacturing of pipe. So due to this energy cost, there is no shutdown in the SS pipe industry or even our raw material supplier also. Everybody is working with the good capacity.
Okay, sir. So are there any more questions in the queue, Michelle, or I can hand over to the management?
No, Mr. Agarwal, we do not have any questions in the queue.
Okay. So, sir, Arunji, I'd like to hand over to you for any closing comments from your end.
Just a moment. Okay. Thanks to everyone for joining the call. We'll keep updating the investor on regular basis for incremental update on our company. I hope we have been able to address all our queries. For any further information, kindly get in touch with me or our investor relationship, Mr. SDA. Thanks to all.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.